Oh, right. The moment we've all been waiting for. Nvidia earnings are 25 minutes away. Yeah, they come out 20 minutes after the bell. But let's go see what... I gotta see what the implied volatility is on this sucker. I'm kind of excited about this one. See what happens here. So implied volatility, we are looking at 10.5%. The same thing we saw earlier this morning. The difference is everything seems to be a little excited going into the close. That's probably somewhat unexpected, especially given how much the day has been moving. Look at that. Look at the NASDAQ into the close. What is this? Funds are buying. Funds are buying. Usually right at the end of the day is when you get the fund momentum. Funds appear to like the Qs and the dip-a-doodle on the Qs. They appear to like... I mean, I'm just not going to say, okay, Tesla, 40 basis points. You've got, well, Nvidia's down, 2 points rising in. Supermicro's down another 7%. Enphase is only down 0.95. That's like your bearer of just how bad things are. Enphase. When it comes to interest rates, at least. Zscaler, CrowdStrike, and obviously Palo Alto Network. Those guys are hammered today. Palo Alto Network, I think, is, look at that, down at 28%. So that valuation, the stretchy valuation, that SASP is not really exciting, folks. Part of this probably has to do with companies just minimizing how much money they're spending. People are very worried about spend. And so they're spending more money on marketing dollars and cutting wherever else they can. Now, I'm not saying that's not setting up for a nasty potential a cybersecurity event, but I mean, what's more sexy, some earnings or worrying about a cybersecurity event? That's now everybody in cybersecurity pulls their hair out when they hear that because they're like, no, the time to worry about cybersecurity is when you think you're safe. But let's be real. Wall Street cares about one thing, and it's earnings per shareholder. And what those earnings per shareholder are going to be in the future. The future is going to be exactly what we're looking for in Nvidia, mind you. So Nvidia, this is going to be a pretty big deal, mostly because of the guidance. Everything's going to ride on guide. Ride on the guide. My projection is that, we have their projection and my projection. So their projection is 20 billies. Okay, so we're looking for a 20 handle from them. 20 billies. That's what we're looking for. I think we're probably going to be somewhere around 21.5 to 20.8. So the reason for that is I think they will beat. The question, because they consistently beat. The question is, how much are they going to guide after this beat? Last time they only guided a 10.3% beat. What happens if they guide flat? If they guide flat, everybody's gonna lose their poopy doopies. It's gonna be entertaining. Anyway, so we'll see what happens. Obviously, just like any data release, it's stressful, it's exciting, it's everything all at the same time. But we've got the reality that in 21 minutes, we will know what the guidance is for NVIDIA. Unless they pull that crap where they do, no guidance provided until the earnings call. That's going to piss me off because that means I'm going to have to sit in this chair longer than I want. So they better not pull that. But they might. We'll see. I don't know. Would that be good or bad? Probably bad. So last time in their press release, they just guided straight out. Anyway, let's get the bell really quick.
As long as they can continue to show that their earnings are going to grow commensurately with their stock prices, that's going to matter. 30 times forward right now is what we're looking at for NVIDIA.
Bob thank you very much. Oh, man. It is almost game on for NVIDIA. I'll see you tomorrow. Can't wait to see what happens in a few minutes in overtime with Morgan and John.
We got to come back for the major indices, the Dow and the S&P ending in the green.
Nothing like coffee. All right, so where were we? All right, so we've got, it's exactly one. Yes, Jack, celebration. Celebration, Jack. All right, so there we go. Nvidia down 2.85%. Let's also see what other earnings we have. Obviously, we're going to focus on Nvidia earnings here, but I guess there are some other earnings that, I don't know, some people might care about. But maybe mention what you want in terms of an earnings call or earnings report if you want another one. I will take a peek here as well at the earnings calendar. Usually we get our first earnings that come through about 5 minutes after the bell. We are probably going to be sitting at, let me see here, NASDAQ earnings calendar. We're probably going to be sitting at here for about 20 minutes while we wait. Looks like we've got some other ones that could be coming out. We've got, what is this? After the bell, Synopsys, Suncor Energy. You've got, after the bell, oh, Rivian's coming out. Rivian! Is Sunrun reporting as well? Let's find out. I don't know that Sunrun is. Are they? Sunrun. Run. No, I don't see Sunrun. Is Lucid? Is that all today? Are you sure? Are y'all just spitting numbers? Oh, Lucid is today. Okay, Rivian does come out today. And LCID comes out today. Oh, this is entertaining. We'll have some entertainment then between now and Nvidia. How fun. Okay, great. So we'll take a look at that. Then, of course, we'll have NVIDIA up as well. So we've got NVIDIA ready to go. NVIDIA ended down at 674. I wonder what the implied volatility is on Rivian. Let's see. Rivian today looks like it's going to be 13.9%. There's more implied volatility on Rivian than on NVIDIA. And Lucid has a 16% implied volatility. Yikes. Wow. Etsy reports today as well. Wow, there are a lot of earnings. Etsy, let's take a peek at that. Okay, how interesting. Okay, we'll keep a peek here. And a lot of earnings today. Okay, cool. Well, we're kind of standing by here. So we'll see as they start coming in. What else do we have? Yeah, NVIDIA is a big one. Suncor, Synopsys. I don't know if people care so much about those. We will look at Rivian, Fidelity National reports, Exact Sciences reports, Etsy, Lucid, Wix. Oh, Dutch Bros, too. Bros. Okay. All right. We'll take a look at that one, too. All right. I thought it was just NVIDIA today. I'm just kidding. All right. Well, we're on standby. Here we go. So I'm just going to keep clicking around until I see some movement here. Toll Brothers ends up 3.9. They do expensive homes, and people keep buying homes. It's impressive. Matterport was down 16% to dollars today. Holy smokes. Yeah, they really, we were talking about this in the morning live. They've really suffered in this transition of trying to get from, like, how do you actually monetize your 3D scans? And when the real estate sector slowed, you know, you had basically a volume collapse. You don't need as much Matterport scanning. And so I think it's harder to sell Matterport cameras to real estate agents. I think real estate agents are a fantastic cohort to sell these suckers to. You know, that's what I used to differentiate myself when I was an agent back in, what, like 2016 or 15 or whatever. So, yeah, we'll see. Okay, so still waiting. Okay. What do we have here? We have nothing yet. Nothing. 5 minutes after the bell is usually when we start getting our first that drop. And we've got... Okay, 5 minutes coming up in about 8 seconds here. So we'll see what we have. Who reports 5 minutes after the bell? Who's it going to be? Who shall it be? Rivian's 10 minutes after. It should be Lucid and Etsy. They're both scheduled for 5 minutes after. And so is Dutch Bros, actually. Okay, Dutch Bros, 4 cents. The estimate was 0.8. That's a beat on adjusted EPS. Revenue, slight beat, 254 versus 252. And forecast 2024, miss, 1.2 versus 1.22 expected. So full year guide, tiny miss on adjusted EBITDA as well. So a little bit of a miss there on Bro. You're up about 1% in the after hours. Etsy meets expectations. Actually, that's a beat on revenue. 842.3 million versus 827. How is Etsy still selling? It's crazy. And of course, the stock's down. Stock down about 1.5% now. Sorry, it's just down about 5% now as the fourth quarter adjusted EPS misses. Sorry, that doesn't say adjusted EPS. It just says EPS. 62 cents versus 78 cents expected. Lucid, miss. Revenue, 157.2. The loss was 604 million. The expected loss was 667. So it's not as bad of a loss, and they're expecting to produce 9,000 vehicles in 2024. Etsy sees a higher take rate than expected. EBITDA margin, though, slightly lower at 26% versus 27.3%. That's probably because Etsy's advertising more. I'm going to guess. I'm not sure. But I'm going to guess Etsy's throwing a little bit more money on getting people on platform. And you've got, let's see here. Let's go to investor relations. I'll pull it really quickly. Okay, Etsy, latest press release, and come on. Here it is. Okay, marketing. That's not that big of an increase. They got an extra 17 millis here, 261 versus 244.8, 6.6% increase. Their total revenue went up 842, 807. The revenue went up 4%. So, I mean, those are reasonable numbers. Lucid getting burned, obviously, there on the loss, but it was less of a loss than expected. So you're actually seeing the stock is flat here in after hours. These are broadly as expected numbers here. Etsy now going, well, it's trying to go, I don't know what the hell Etsy's trying to do here. It was negative 5%, now it's flat, it's all over the place, whatever. Etsy's an interesting one. We've got cash and short-term investments of about $1.1 billion at Etsy. You do have some payables and expenses, though. Payables and expenses adding up to, I'll call that 30,353. What is that? Payable due to seller, I don't count that. I don't count that. I don't count that. Other current liabilities, 41, I'll count that. And I'll count their long-term. No, I'm not going to count their long-term. That's 2.2. So I've got 3 times as much cash as I have, roughly, as I have $424 million in bills. So they're fine in cash. They do have long-term debt of 2.2 billion, which definitely double exceeds the cash that they have. It's okay. So we're not going debt-free anytime soon, but it's actually, I mean, none of that seems very scary. How's their cash flow? Let's go to cash flow. Nvidia's probably going to skyrocket, by the way, because A, I think they're going to beat, and B, I trimmed a little bit. And so because I trimmed, I'm sorry if you're shorting it. It always does the opposite. But whatever. So I think it's nice to have a little bit of cash. So stock-based compensation, we're at 284. Wow, net cash by operating activities for the year, $700 million at Etsy. That's pretty impressive. I have to say that is some nice fat cash generation. Wow, what's the valuation on this sucker? Rivian's not out yet, but what's the valuation on Etsy? Because that's not bad. You're sitting at 382 for the end of the year earnings. 77.29 divided by, you're only trading for 20 times earnings here. Problem is EPS growth might be at, I don't know, flat to maybe 15%. It's anybody's guess. I guess we'll have to see what their guide is, but let me see quickly. I've got Rivian ready to go, so I've got my eye on Rivian. That comes out in the next minute. Let me see if I have guide. First quarter guidance, expected to decline. There it is. There it is. First quarter expected to decline. Oh, okay, Rivian, production, 58,000. The estimate was 80. Cuts 10% of salaried jobs. Losses exceed expectation, 2.7 billion. The estimate was 2.59 billion. They did produce more vehicles. They produced 17,541 versus the estimate of 16,574. But they only delivered 13,972 versus the 14,302 expected. The forecast production big cut in forecast production here. We've got loss per share at 136 versus 133 expected. Cash and cash equivalents almost $1 billion lower than expected. That's not good because they are cash broke. You're at 7.86 billion versus 8.74. Misses estimates. The revenue does come in at 1.32 billion versus the estimate of 1.25, which is a beat. But now cuts 10% of salaried staff, citing economic uncertainty. That's a 10% decline on the stock right there in after hours. Tesla's moving 28 basis points in sympathy. Not a big sympathetic move there, but mostly because I think Tesla's the reason all these other companies are just getting destroyed. Tesla and Enphase, they have the margin to blow everybody else out of the water. They're going to come out of this, and people are going to be like, what the hell? Where did those two stocks come from? They're the only survivors in whether it's solar or whatever. It's crazy. That's just my opinion. I'm preaching to the choir. You've all have heard this crap before. So, okay, let's get the investor relations press release from... Oh, just give it to me, you losers. Come on, production and delay. Just give me the frickin' numbers, Rivian. Rivian's being really lame right now. They're not letting me get the stuff I want from their investor relations page. Just give me the damn document, you losers. Okay, fine. I will go to sec.gov then. Rivian now down 11%, waiting for Nvidia numbers. So we just covered those Rivian numbers. I really want to get my hands on their actual financial. You're down 13% now. SEC doesn't show it yet. Nobody has the damn document. Investor relations. I see the production and delivery. Press release. This was for Q4. Oh, there we go. Wait, no, that's 22. Yep, nope. No link on their website. Production and delivery, webcast, nothing on the SEC's page. Y'all suck. So how did this come through the tape then? Usually they put a link here. I have no idea. I can't get my numbers on this. So I'm going to quit bitching for a second here and just wait for it to come through. But the numbers aren't good. So you know what I'll do is I'll look at their last press release or their last 10Q. And I want to look at how much money they had last quarter. While we wait for Nvidia, we're 7 minutes away from Nvidia here. So let me look at Rivian last numbers. Last numbers on Rivian, so ending September, we had $7.9 billion in cash. Short-term investments, 1.1, so that puts us at about $9 billion cash. Okay, so think $9 billion cash, and then $9 billion cash, we have liabilities. Okay, ready? So I go 9,000, and then I do this together. This is from the last one. Accounts payable, 1134, minus. Accrued liabilities, 1116, minus. I don't care about leases. That's actually not that bad. Long-term debt, 2720. I mean, that's long-term debt. I don't even have to take that off. They must have raised money. I think they did a raise. That must be what they did. Let me look at their cash flow statement from the last time. So financing, net change in cash. No, they didn't that time. Okay, here. What about... Oh, here we go. Proceeds from issuance of convertible notes. Okay, so they issued about $1.5 billion of convertibles. That makes sense. And then their cash flow from operations ending in September was negative $4 billion. So their cash dropped like $4 billion. So I really want to see their numbers here for this quarter, though. They would just update the damn thing, but they don't. Whatever. It'll be up soon enough. Did they do it yet? No. No, live webcast link, Rivian investment, nope, okay. All right, whatever. So we'll pay attention to see if we can actually get the investor statement from Rivian. I personally don't like that, that they did not give us the document. But I'm a big fan. Show me the numbers. Show me the money. Publicly listed company, it should be there. So, whatever, enough. So, yeah, this Rivian 10% salary cut is very interesting. Again, citing economic uncertainty. I should be able to get the document here. If they have it, there must be a source to this. No, this was all done by automation. So I think sometimes what happens is they send these things to the wire services, and that's how the wire services get it so fast. They're so popular that, they get it directly. Anyway, Coca-Cola consolidated EPS 808 versus 1261 a year ago. Net sales actually up 3.6%. Income from operations 178.5 million. Adjusted EPS These are all comparisons to last year. That's Coca-Cola Consolidated. Okay, what about, so Lucid, no other updates. We're just on standby now for Nvidia. I mean, I don't think we can really, you know, say how important Nvidia here is. I mean, Nvidia is, okay, Tesla now at about 45 basis points on, I can't even really call it Rivian sympathy, really. But anyway, give me the Rivian numbers. The, what's it called? How important this is for the entire stock market, quite frankly, because so much is being held up by the AI market right now, just AI spending. Everything's going to be about that guide. I want to be exceptionally clear about this. We're about 4 minutes away. No, NVIDIA's not out yet. NVIDIA's 4 minutes away. So I want to be exceptionally clear about this. Okay, this is my opinion. So you can look at this very closely. But what you're going to find right here is a fiscal 2024 summary. These are their last earnings. And you can see that revenue comes in Q3 at 18.12 billions. They forecast 20 bill. Now that's great. They forecast 20 bill. That's wonderful. We love that. Okay, great. But what else? Well, what else is we have that they usually beat. So they usually purposely, I think, underestimate a little bit. They're a little conservative on their forecast, on their guide. And then what you get stuck with is a beat of anywhere between 15 to 18% on average in the last few quarters. I put those numbers together. So I think we're going to get a headline number of somewhere around 21.5 to 20.8 billion. Maybe we'll get a big beat on that. That's great. But what I really want to know is what's the guide going forward on top of that, and then I'm going to divide. So if they say, oh, we hit 22 and we're guiding 25 for the next quarter, that'd be 13.6%. That would be growth on top of their last estimate. That would be good, because then you're still growing, 40, 50% a year, which is phenomenal. So we'll know that momentarily, obviously. This is a very big deal. I think the entire market is really hinged on this right now. We are looking very closely. Here's Rivian down 14.5% right now. Here's Nvidia, so expect some fat movements here. Remember, if you're playing options on this sucker, you really need a movement of probably 10.5% to actually, depending on what kind of options you got. But for volatility purposes, you've got to overcome about 10.5%. Too bad you can't close options in after hours, huh? Anyway, so we're looking for adjusted EPS to be 4.6, GAAP 4.24, revenue. Oh, Wall Street bumped it a little bit. So Nvidia guided 20 billion. Wall Street's at 20.4. Worth noting, Wall Street already priced in about 400 million of a beat. I still think the beat's going to be more than that. Again, I think the beat's going to be 21.5 to 20.8, somewhere around there. So we'll see. And net income 11.4. So obviously, we'll go through margin, we'll go through all the goodies and stuff like that. We're gonna do all that together. As far as freaking Rivian, still nothing from Rivian in terms of actual financial statements. Shocking. So okay, we're now about 1 minute away. 60 seconds. Quick! I need more coffee. All right. Who's ready? I'm ready. Oh my God. All right. It's going to be fun. Looking for, if I get, it should be over 21. Over 21 billion of revs. The guide matters though. And then I want to see probably over 23, maybe a 24, 25 handle for guide would be really cool. This is, again, we're looking for Q4. Okay, so once we see Q1, that's going to be our guide number. Come on, baby. Here we go. We're in the minute. Any second now. It's anticlimactic. Hey, have I pitched House Hack yet? Courses linked down below. Life insurance, metkevin.com/life. Come on, give us some numbers here. Na, 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 na. Oh, are they going to be late? They can't be late. They have AI. Somebody says it's 430. I mean, my thing says 420. There it is. Okay, Q1, 2.9 for gaming, data center beats, 18.4 versus 17.2. Revenue, 22, big beat. It beat my numbers here too. It definitely beat this. Sees 24, there it is. That's what I was thinking, 24. That's just the number we were just talking about. So that's 24 divided by 22.1. That's 8.6. That's still really good growth. 8.6, but it's definitely slowing growth. Q1, 24 bill, plus or minus 2%. Q4 data revenue, 18.4 billion versus 17.21. So you have a beat, but the growth, it is starting to trend in that slowing direction, right? 8.6%. I go 8.6%. I annualize that number, okay? I get 34% growth. It's not doubling anymore. It's not tripling anymore. It's not quadrupling anymore, right? So while that's expected, again, everything on Nvidia here is going to be about guide. That earnings call, what they say about guidance, that's all what this is about. Now I'm going to go through the actual deck in just a moment here. Let's get the Nvidia press release up. We're going to go through this line by line. Q1 adjusted gross margin, 77% on gross margin. Remember, they do not manufacture chips. They design chips. This makes them very high margin, which is fantastic. We like that. That's a good thing as an investor. But let's go ahead and get our press release. It's not up on their website yet either. That's okay. It'll be up momentarily. So kind of keep refreshing here. Nvidia says generative AI has hit a tipping point. Okay, like we've maxed out our transition, or what does that mean? What's a tipping point? A good one or a bad one? Probably. Jensen always is pretty bullish about this. So Q1 OPEX, 2.5 billion. You've got data center revenue, again, it beat. Automotive revenue beat at 281 versus 272. Data center revenue, again, 18.4 versus 17.21. Gaming beat 2.9 versus 2.7. Super microcomputer down 4% in sympathy. Remember, they're one of your preferred partners for Nvidia in terms of, server racks. Yes, they're a freaking server rack company. Everybody's on the Nvidia webpage here, it looks like. So waiting for these numbers to load, just like Rivian. Stock's now down about 2.4%. I know there were some folks making contrarian bets on this one. You actually had Tesla drop about 1.5% following that Nvidia release. Tesla falling in sympathy with Nvidia. You've got Rivian dropping another 17%. Lucid pushes down to 5%. Etsy down now 6%. You've got NAS going down about 30 basis points here. You've got Super Micro. Let's see, SI. This is probably a bit of an overreaction. These are not bad earnings at all. This is very good. It's just, the growth is not going to continue forever. We know that. That's very understandable. So then we're looking for, it's down about 1%. That's not a big deal. Their website won't load because everybody's on it, whatever. Okay, we'll get these filings at some point here. It just says loading. Crap. That's all right. Let me see. I think I can get a document from somewhere else though. So I'm going to keep looking for it. Yeah, that's 2 today. That's Rivian and Nvidia that want to be a little fussy. Let's take a brief listen in to hear what they're saying.
The amount of GPU he needs. We heard from Amazon that they're finally getting access to supply. So
whatever. Okay, supply's catching up. That's the big concern with Nvidia, right? Is that supply, once supply catches up, do margins go down? You're still beating like crazy though on estimates, so I'm not offended by these. I think these numbers are just where they should be. Again, I want to compare just briefly. We'll do a little brief comparison while we wait for the actual document here, which I'm pulling as quickly as I can. But these were my estimates right here. I'm gonna write right next to it. These were Kevin's estimates. We ended up getting 22.1 here. This was my guide. And then Wall Street was at about 20.4. I was expecting that kind of beat solely based on their prior beats. It's not like this was magic. I got it. Okay, here we go. Statement of financial conditions. Got it. Okay, and then I do have their guide coming in at 8.6% again. Okay, perfect. So let's get commentary. Here we go. Okay, so first quarter outlook, revenue is expected to be $24 billion, plus or minus 2%. That's normal. They always kind of do a little plus or minus. So that's fine. No issues here. You've got revenue. Revenue is up 265% from a year ago, 22% from the last quarter. That's great. Nvidia is now up 55 basis points, by the way. Data center revenue for the fourth quarter was a record, up 409%, 27% sequentially. That's great. Good. So this continues. Gaming revenue up 56% from a year ago, flat sequentially. I want to see, where's data center? Data center revenue was up 27% sequentially from the prior quarter. Now that's actually pretty good. 27% growth in data center revenue from the prior quarter, pretty good. It's just, again, the question of how much they're guiding forward, and that's about an 8% overall beat. Let's take a look here. I'd like to get this all on the iPad, but I don't know that I'm going to be able to as quickly as I'd like. So let's take a peek here for a moment. And yeah, no, their website's not really loading, so I'll just read it off. Okay, no problem. So CFO commentary, what do we have here? Revenues at the company coming in at 22.1, gross margin 76%. That's up 2 points from the last quarter. That's very good. We've got operating expenses, 3.1 billion, big deal. Operating income's massive. You have earnings per share in the quarter of $5. In the quarter, it's phenomenal. You've got, let's see here, operating, let's see, that's non-GAAP. I don't really care about that. Segments, compute and networking. Okay, here we go. Compute and networking went up 17,898 divided by 14,645. That went up about 22% in the quarter. Graphics went up 21%. That's very good. I got to give it to them. That's really good. Data center, see that data center explosion is good too. 14,514, 27% data center increase. China did drop. China drops. Let's see, instead of SMCI now going positive with Nvidia moving positive 2%. SMCI data center revenue is up 27%. We mentioned that. Gaming's flat quarter over quarter. And let me see if there's more commentary on the guide here. It's all going to come down to guide. Data center, fourth quarter, 27% sequentially. This reflects higher shipments of the Nvidia Hopper GPU computing platform used for training and inference. Makes sense. Then we've got fourth quarter, large cloud providers represented more than half of our data center revenue. Large cloud providers represented more than half of our data center. Strong demand was driven by enterprise, consumer internet applications, automotive, financial services, healthcare. Customers across the industry accessing AI. Data center sales to China declined significantly. Data center revenue, blah, 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 blah. Okay, what else? Do we have anything else? No. Cash and cash equivalents are up at $26 billion, basically twice as much as they had last year. Inventory sitting at $5.3 billion. Purchase commitments were $16.1 billion, down sequentially due to shortening lead times. Okay, see, that's good. Like, in one sense, it's good because you're able to churn the revenue more, right? You churn the revenue. Cash flow from operating activities for the fourth quarter were up $11.5 billion. That's really good. And this is such a great company. These are really, really great numbers. The revenue, 24 bill. That's the same. Okay, so that's going through this. Tax rate, 12.9%. Fiscal year was 12%. Increase from the prior. Blah, that's not a big deal. Okay. Fiscal year interest income was higher thanks to higher interest rates. This is the thing. It's all the cash-rich companies are making so much money. Seeding inventories are good. I don't know about that. They've less inventories. You have. Let me get if I could get some more insights here. That's the. Let me go to the press. That's the presser. Accelerate computing and generative AI had hit a tipping point. Demand is surging worldwide across companies, industries, and nations. That's the full quote. Then you've got data center platform is powered by increasingly diverse drivers. Demand for data processing, training, and inference. Yeah, we already saw that. RTX, introduced less than 6 years ago, is now a massive PC platform. You've got Nvidia will pay its next quarterly cash dividend of 4 cents on March 27th to holders of record March 6th. Okay. So that's pretty good. These are really good numbers. The forecast at 24, I want to write that down. So let's analyze this for a moment. This is the way to do this. We're going to look at this closely. 24. So if I go 21 to 24, this is your total rev, right? And so you go 24 divided by 22, that's 8.6%. That's not a bad amount of slowing, though, because look at this. You see, you had 34% from Q2 to Q3, 10%, 10.3%, but that did end up being a higher number, right? Because you actually ended up getting 22.1 divided by 18,120. That's actually a 22%. So they went from 34% to 22%. Now they're guiding 8.6, but they'll probably beat that again by, say, 16%, right? So if they beat 24 by 16%, you're at 27.84. So 27.84 divided by the actual 22.1, that's still 26% growth if they end up beating by that similar amount. That'd be very good. That doesn't indicate that growth is actually really slowing down if they beat by that same number. That's better than expected. And so, again, you could see that right here. All I did was adjust this 8.6 beat right here by, let me confirm my numbers here. So if I go, wait a sec, 24, wait. No, that might not be right. Hold on, let me confirm. Let me take that number back really quick. 24, the 8.6% beat, that's what we have to multiply up. Multiply that by about, say, 16%, 1.6. So it'd be about a 10% beat. Okay, I may have messed that up. Yeah, that'd be more like 26. Okay, so that'd be more like $26.4 billion if they beat similarly. My fault. 26.4 divided by 22.1, that'd be about 19.4%. That's not bad. Still, yes, that growth is slowing, but not much. That's not slowing a lot. That's really good. That's just very good. Look at that. So you have to say, I mean, you got to hand it to Nvidia. That's very, very good. So good for them. Nvidia is up quite a bit now. So is Super Microcomputer on this. So looking at this, you've got Nvidia up in after hours here. You've got, I don't know, the shorts getting burned, or if, are we hitting a rejection point here? Probably. It looks like briefly there for a moment we hit 726. Remember, we've got a pretty big resistance at 731. Let's see here. Okay, there we go. Then we have 9% on Super Microcomputer. Rivian's still down 16%. Still waiting to get that darn Rivian sheet, which we do not. Oh, shareholder letter, it's up. Okay, so the shareholder letter is finally up on Rivian, which we'll look at Rivian in just a moment. I'll have that handy here. So, grabbing some more. I want to get some more suit reaction here. But like I said, this right here, that's not a big slowing if they end up getting this. This is very good. It shows you the growth rate is actually still strong. Okay, that's really good. So I want to see how the rest of the market is being affected by that quickly. We've got after hours, Supermicro, ARM's moving on this, Palantir's moving on this, AMD's moving on this, TSM's moving on this. Basically all of your chip sectors are moving on this, which is really good. So with the exception obviously of Rivian over here. Rivian and Etsy's only down about 2.7. Tesla's basically flat. after the Rivian numbers. I do want to look quickly at cash flows for Rivian. Cash flows for Rivian, they burned in the year. Cash burned in operating activities, $4.8 billion. Well, that's for the year. That's maybe not as bad as thought. They do have, if I quickly just look, and then we're going to go back to NVIDIA, quickly look at Rivian, 7857 in cash. That was less than they had expected. Oh, but then they also do have short-term investments, so I'm going to add those in. So I'm at 9368. We obviously have inventory and some nominal receivables, but I'm going to pull out 981 for payables, liabilities, 1145 minus long-term debt I don't have to pull down. So they've got plenty of free cash. They got $7 billion of free cash. They've got enough cash to get through the next year and a half. What were their losses here on Rivian quickly? Rivian gross profit was 3 months ended was negative $606 million. That's quite a bit. It almost looks like their losses have accelerated because at the year they were losing about $500 million a quarter. Now they're losing $600 million in the last quarter, and that's obviously before SG&A. Those numbers are also up year over year, not horribly, but you're still losing about 1.5 billion per quarter. So if you have 7.2 billion versus 1.5, you've got maybe a year to a year and a half before you're out of money. Okay, so that's for Rivian. That's what I wanted to see with Rivian. And then Nvidia is getting rejected. Nvidia is getting rejected by that 731 line. I don't know if there's going to be enough to push a breakout on this one tomorrow. Who knows? Maybe it'll have to end up being something like what's it called? Something we hear in the earnings call, or something that we end up hearing from Jensen. We know Jensen's going to be very optimistic in the earnings call. They almost always are. And rightfully so. You know, that's not to bag on Jensen at all. That earnings growth, I have to say, that is better than I thought. I took a little bit off the table on Nvidia. You know, I was like basically 14, 15% Nvidia or whatever. I'm like, I'm going to take like 3% and just put it into cash. You know, hey, if the stock's up 5%, okay, fine. Could have been up a little 5% more. But you know what? I don't think it's unprudent to have some cash. I still have no idea what's going to happen in the earnings call, so I'm okay. I'm okay with that. But I will say, this is impressive. I absolutely expected that while they would still grow, and this AI, bubble people call it, it's not going away. That growth number, very, very good if they maintain that. And so far, it looks like they will. I'm just reading some commentary here. So some folks are saying, I've seen some debates as to whether or not NVIDIA earnings will be described as macro. That's interesting. Certainly, it's arguable about whether a single event could be a watershed, though the company's results and projections released last May certainly qualify. The initial reaction to income and guidance figures probably do not, because it says relatively little about where the stock is going, blah, blah, blah. Comment about AI being at a tipping point, that's a positive, right? We're still just transitioning. It's very good. The earnings call is, let's see here. I'm pretty sure that's in about an hour. Today at 2 p.m. Pacific time. Oh, the earnings call is in 20 minutes. I don't know. Should we do the earnings call? I wasn't really expecting to do the earnings call, but it's in 20 minutes. They're not making us wait as long as, with Tesla, they make you wait like an hour and a half after releasing the earnings report to get to the frickin' call. It's just a pain in the butt. Nobody wants to wait that long, but that's what they're into. All right, well, everybody says do it. Let's see here. I don't know. Let's see here. Webcast. So it starts in about, okay, yeah, it starts in about, the actual link to it will start in about 6 minutes, so it's not even out yet. All right. We'll do the earnings call. But so I'm going to want to, so what am I going to look for in the earnings call? I'm going to look very specifically for, let's write some of these things down, okay? So let's just insert a clean page here. So I will look for, Oh boy. Why don't you all shout some things out that you're looking for? But I'll shout some things out as well. So I will be looking for in the earnings call, what am I going to look for? I'm going to look for, one, how robust is that 24 billion guidance? And, what's the refresh cycle like, right? So the refresh cycle, are people going to actually go from H100 to, B100, let's say? That's a big deal. That refresh, the iPhone 1 to iPhone, 3G moment, that's a big deal. That $24 billion guidance, I think is great. That's better than I expected, as well as the $22 billion. But any tipping point to stabilization of growth? That's probably the biggest thing I'm going to be looking for, is anything to suggest that growth is stabilizing. That'll be a big deal. And that could mean margin, competition maybe, right? I could also say margin as the product becomes more, in supply. Margin as supply catches up, right? That'll be important. Let's see here. Increased dividend? I don't know. Maybe some CUDA updates would be interesting. Yeah. China market outlook? Ooh, no. I mean, we're going to hear, I'll put other notes. Obviously, we're going to hear about China. It'd be nice to hear something about CUDA and sort of their moat. And I don't think we'll hear much on an increase in dividend. I think that would have already been announced, or a split. To me, neither really matter to me. I don't care about a dividend or a split. You could buy with fractional shares, so I don't know that that's very, very necessary. Then you've got you've got the H200. It's almost old news already, because you're going to go from the H100 to the 200, and then you go to B100, which is coming out later this year. So let's see here. Musk making a statement about quadrupling his investment. Yeah. I mean, I do think your major customers, maybe some insight. I'm going to write that one down on the other side. So I'm going to call that insight from major customers, right? I think there's absolutely some usefulness here. Nvidia. Let's see here. We talked Coca-Cola, Dutch, Etsy, Lucid, Rivian's cuts, and yeah, okay, there's nothing really new and elsewhere. So we're about 17 minutes away from the earnings call. So I guess we'll go through that together. And I think that's nice. That's nice of y'all to want to hang with me. So did Sunrun end up reporting? I know everybody kept talking about that. I just didn't see that as a list of earnings coming up. Let me quickly see. Oh, yeah, Sunrun did. You're right. Sunrun and Lowe's partnered to bring solar and storage to homeowners. That's smart. That's very smart. I love that idea. Revenue comes in at 516 versus 523 expected, and they're offering convertible senior notes. Ugh, I don't think I would touch those with a 10-foot pole. I don't like that company. The stock's down 12%. Sorry if you invest in the company. But what do you got here? This is, that's going to continue to confirm sort of their downtrend that they've got. 1370. Oh, wow, that's almost perfect. Let's see here. Let's drag this out a little more. That's not actually that great, is it? Let me see. Yeah, I could probably pull this out a little more, and then we'll get into the Nvidia earnings call here. It's pretty good, actually. Yeah, something a little bit, it's not perfect over here. It gets pretty good over here. And then this has kind of lost it a bit. But anyway, if I have this, where does that put us down to? Yeah, that should theoretically put us a lid of about 14.5. So we're right under that. So we'll be over here on Sunrun. Okay, Rivian's trying to, it sounds like, recover a bit here. And Nvidia is doing quite well. You know, back up to the 7, just really knocking on the door of the 731 figure over there. Okay, good. So, oh, I wasn't showing the screen. Sorry. Quickly, what I was going to show, my bad. So you've got Nvidia testing this line here, and then this is what I was showing with Sunrun over here. Once here, and then also just sort of like a longer downtrend it's a little bit more visible on the week chart. There you go. You can kind of just see this longer term downtrend we've been hitting. Very common for the industry as well. 7%. Your hurdle here is going to be you really need more than 10.5%. Once you're over 10.5%, that's I think your hurdle on to expand to be profitable on options. The earnings call for Nvidia is rolling. Well, I mean, it's not live yet. It starts in 14 minutes. Hear that elevator music? Okay, so Nvidia report and earnings call. There we go. Okay. I'm gonna just update the title really quick. Yeah, switchies. There we go. Okay, so now the big deal is obviously going to be, what do they say during the earnings call? We've got 13 minutes to go for the earnings call. I guess if you have any house hack questions, you're welcome to ask away on that. So this is, there we go, update the title a little bit really quickly. Change that. There we go. Okay, perfect. So guidance better be good. They already gave guidance, so we already got the guidance. And now we're just sort of sitting in the earnings call, waiting for the earnings call. We got the guidance, so that was very good. Better than expected. Let's take a brief listen in over here.
Remember, Google is generating $60 billion of cash flow. So I would just say it is real. The infrastructure build out is serious. And it is also a time for caution and not to see this as like some crazy meme stock. This is being, in my sense, overbuilt right now, which will be massively deflationary for many of these AI chips.
Interesting.
Yes.
Okay,
Yes.
so when you say 5 years too late,
Yes.
what, especially as a retail investor, and I know you're focused on the private markets and VC, venture capital specifically, but when we talk about 5 years too late, what would be right on time right now?
You know, it's really interesting and almost a little bit contrarian. Everybody is racing to the future right now. And, you know, it's a time when rates have risen for the past 2 years. When rates are rising, it flips the dynamic that we saw for the past 10 years, which is low rates are like a tractor beam for the future. They are pulling far out, fanciful ideas that are maybe 20-year things into these 20-month frenzied projects. Now with rates rising, a lot of entrepreneurs and a lot of venture capitalists, you have to ask the question, have you learned the lesson of the past few years? I know we're in an election year. I know the White House and the Fed want to create a wealth effect, want to fight inflation. These two things are sort of incompatible. I actually think that the contrarian thing to do right now that people are going to realize 5 years hence is not race to the future to fund space elevators and fusion and all kinds of crazy stuff that we are love to fund, but we like to reduce that gap between science fiction and science fact. Right now, we're obsessed with the theme of maintenance. You think about CapEx. There's two parts of CapEx. There's growth, which everybody's been funding, and maintenance, which nobody's funding because nobody wants to think about the trillions of assets that are there right now that should be fixed. That's in defense. That's in biotech, that's in infrastructure, that's in artificial intelligence, specifically for the open source software systems that need to be maintained by the likes of companies like Hugging Face and Together Compute.
Josh, I know a lot of VCs would love to see that this NVIDIA thing is overdone because so much of the money that they're giving to these startups is having to be spent on accelerators and compute. But what if NVIDIA is actually able to maintain this lead they have, and if the nature of the data center has fundamentally changed?
Well, remember what, John, you make a great point. What any one company does individually is rational. Facebook building out, Microsoft building out, Google building out, NVIDIA building their own clouds, lots of other providers trying to give you compute access through NVIDIA chips. What happens, though, collectively is it's irrational. And there has never been a boom where we haven't seen something get overbuilt. So I was a massive bull on NVIDIA going back 8+ years ago. And I'm not a bear, but I just think it's a time for caution that what can go on forever will eventually stop. And I do think that this is going to end up being deflationary. I think lots of other companies are looking at how do we take AMD, pair it with new languages like Python to take on NVIDIA and CUDA and give people alternatives. So I would be more interested at the moment in AMD over NVIDIA, but I do think NVIDIA's got a pole position. There's going to be a lot of alternatives. Again, you look at something like Together Compute, massive distributed computing, doing it way cheaper.
That said, it seems like we're in a period where AI accelerators, where these chips are the currency of the future, and all startups need access to them in order to build the kind of lead that they're going to need in their respective industry that they're targeting in order to pull ahead. Isn't that the case right now?
It is, and again, do you need OpenAI plus Anthropic and Claude plus 10 other large language models? Many of these things are going to see a winner takes all, and the massive amounts of money that they're raising, we're talking billions of dollars, and you nailed it. A lot of that money has been and is going to NVIDIA, but I think that that starts to level off. What's really interesting to me is the next wave, and that's not going to be just large language models. That's going to be in robotics. I can tell you that there are some really cutting edge teams right now coming out of the likes of OpenAI and DeepMind and elsewhere to focus on AI for robotics.
I like this guy. I agree with a lot of what he's saying. I don't know who this person is, but it's pretty good.
Automated wet labs and robots doing scientific experiments. That, to me, is the near-term future of maintaining the cutting edge for both biotech and for AI. Then you talk about defense, and you're still going to see a huge amount of AI in defense, but specifically around maintenance.
That's exactly my question for you, Josh, because you did also just publish this letter today. Two of the names that are trading higher in sympathy with NVIDIA are Palantir and C3 AI, which both contract with the Department of Defense. So the fact that you use the B word, bubble, where defense tech is concerned, what does that say?
Well, again, I always like to be early to things, and sometimes being early is the same thing as being wrong. I know that, okay? But in this case, defense, it has all the hallmarks, not today, not in the next 2 or 3 years, but in the next 4 or 5 years, it's going to be a bubble. Why? You have companies like Anduril and Saildrone and Hadrian. Hadrian just announced $118 million Series B. These are all Lux portfolio companies. We're super proud of them. They're rebuilding the arsenal of American democracy. What happens next? Copycats try to follow. They look at them as proof positive. Hey, those guys just raised a lot of money. Their valuations are increasing, tens of billions of dollars, revenue coming in, billions of dollars of bookings. We can do the same thing. What happens next? Investors follow, then fund of funds. And the fund of funds thing is interesting because you get a moral layer where you're disconnected from some of the ESG concerns of being involved in a kill chain. That's something that we as investors had to say, are we comfortable with that? So I think you're going to have a flood of capital coming into defense. Eventually, it's going to be a bubble. We're 5 years away from that.
All right. Josh Wolf of Lux Capital. Always great to have you on. Thanks for joining us.
Great to see you both.
And NVIDIA now up 8% in overtime. Coming up, we're counting you down to the calls. NVIDIA and Etsy among the many.
Yeah, and we are right there on that line. That is a big line to ride right there. Is this earnings call going to help push them over? That's the big deal. I am going to put a full summary of the earnings call up on ehack.com. So we'll have the whole thing going with NVIDIA earnings call. We've got, I'm going to put some other summaries. I still got to write it, the summary for the FOMC minutes, so I'll do that as well. We've got a little bit on Rivian up there. Big thing for Rivian is, and I'm just putting a little note there, probably down to, I would say, 12 to 18 months of cash left again. Raised, I should say. Raised 1.5 bill in cash last year. And Q4 did lose 600 mil on the gross side, which was greater than the average 500 mil loss per quarter previously. So that's just a little note there for Rivian. And then we are now testing that Fibby there. We'll see what happens. Okay, good. So next earnings call. We are about 6 minutes away from the earnings call. So we'll see what Jensen says. And then we've got Sunrun down 8%. Dutch Bros up 6. Etsy up 6. Oh, sorry, Etsy down 6. My bad. Lucid was down. Etsy, I didn't actually mind the Etsy earnings that badly. I quickly put a little note there that I'll quickly write them down. Remember, Etsy was, we already ran through these, but Etsy Q4 rev was 842.3 versus 827.3 mil. And they've got plenty of cash, so I'm going to make a little note of that. Plenty of cash to cover short-term obligations, 1.1 billion versus roughly 400 mil short-term obligations. Margin a bit weaker, though advertising didn't seem much higher. Generates about 700 million in cash flow. Last year generated, which is great. Really, really good for Etsy. I actually didn't dislike that as bad as I think the market did here. Again, to generate $705 million in operating cash flow with $12 million. I mean, that's you're almost 700 million in free cash flow here. It's remarkable. So that one's just getting a little punished compared to some of the other options, I suppose. Modest activity. Okay, this is just coming through the tape, actually. Etsy sees modest, it's probably from their earnings calls, sees modest active buyer growth in U.S., strong for international. Okay, that's interesting. They did miss a little bit, though, with EPS. EPS did miss. I'm going to write that down. EPS... Q4 EPS did miss 62 cents versus 78 cents. There we go. Okay, good. So, yeah, that's pretty good. So now it's all about Nvidia. You're at about 8.7%, so you're almost there at that hurdle for the options volatility. And we are, let's see here. JP Morgan Kolonovich, what does he got to say? Bank's chief market strategist said a recent pickup in consumer and producer prices has cast a shadow over economic enthusiasm. He said recent data is likely to chip away at investor expectations. Chip away. Okay, we're sitting on it now with a minute candlestick. I mean, that doesn't really mean anything until you actually close above it, but it's pretty good. SMCI is up 10% on that. We are 2 minutes away from the earnings call beginning. This is very important. I guess I should also, I'll throw on eHack the stream of this. So, let's see. 2 minutes away from the actual call. So obviously we'll cover that, play that audio, and go through it. Okay. Oh yeah, I think I said if anybody has questions, you're welcome to ask. Let me give a couple answers here really quickly. So, did anybody have answers? Okay, so waiting for this call. Stock's up almost 10% now. Let me see. Nope, waiting for the call. Okay, so Nvidia about to announce foreclosure. Yeah, right. Nvidia, so they got a 4-cent dividend. They already announced that. No, I do not think that Intel is a viable competitor to Nvidia, but I do think that they can manufacture for Nvidia. I think that's the future partnership. Let's see here. Let's see here. 30 seconds or so before this should begin. Nope. Okay. Apple is just a fancy skin, everything in on Nvidia. You've got, how are the babies? Babies are great. Thank you so much. Okay, still waiting for that call. Somebody here says Nvidia is going to 900. If you break that 731, it's going to be a big deal. You're breaking it right now. Holy crap, look at this. I mean, we'll see what happens. But the next stop here is like 969. That's insane. All right, we'll see. We shall see. Nope, still waiting for the call. Okay.
Question, press star one again. Thank you. Simona Jankowski, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the fourth quarter in fiscal 2024. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the first quarter of fiscal 2025. The content of today's call is NVIDIA's property. It can be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, February 21st, 2024, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Simona. Q4 was another record quarter. Revenue of $22.1 billion was up 22% sequentially and up 265% year-on-year, and well above our outlook of $20 billion. For fiscal 2024, revenue was $60.9 billion and up 126% from the prior year. Starting with data center. Data center revenue for the fiscal 2024 year was $47.5 billion, more than tripling from the prior year. The world has reached a tipping point of new computing era. The $1 trillion installed base of data center infrastructure is rapidly transitioning from general purpose to accelerated computing. As Moore's law slows while computing demand continues to skyrocket, companies may accelerate every workload possible to drive future improvement in performance, TCO, and energy efficiency. At the same time, companies have started to build the next generation of modern data centers, what we refer to as AI factories, purpose-built to refine raw data and produce valuable intelligence in the era of generative AI. In the fourth quarter, data center revenue of $18.4 billion was a record, up 27% sequentially, and up 409% year-on-year, driven by the Nvidia Hopper GPU computing platform, along with InfiniBand end-to-end networking. Compute revenue grew more than 5x, and networking revenue tripled from last year. We are delighted that supply of Hopper architecture products is improving. Demand for Hopper remains very strong. We expect our next generation products to be supply constrained as demand far exceeds supply.
That's big.
Fourth quarter data center growth was driven by both training and inference of generative AI and large language models across a broad set of industries, use cases, and regions. The versatility and leading performance of our data center platform enables a high return on investment for many use cases, including AI training and inference, data processing, and a broad range of CUDA-accelerated workloads. We estimate in the past year, approximately 40% of data center revenue was for AI inference. Building and deploying AI solutions has reached virtually every industry. Many companies across industries are training and operating their AI models and services at scale. Enterprises across NVIDIA AI infrastructure through cloud providers, including hyperscales, GPU specialized, and private clouds, or on-premise. NVIDIA's computing stack extends seamlessly across cloud and on-premise environments, allowing customers to deploy with a multi-cloud or hybrid cloud strategy. In the fourth quarter, large cloud providers represented more than half of our data center revenue, supporting both internal workloads and external public cloud customers. Microsoft recently noted that more than 50,000 organizations use GitHub Copilot Business to supercharge the productivity of their developers, contributing to GitHub revenue growth accelerating to 40% year on year. And Copilot for Microsoft 365 adoption grew faster in its first 2 months than the 2 previous major Microsoft 365 Enterprise Suite releases did. Consumer internet companies have been early adopters of AI and represent one of our largest customer categories. Companies from search to e-commerce, social media, news and video services, and entertainment are using AI for deep learning-based recommendation systems. These AI investments are generating a strong return by improving customer engagement, ad conversation, and click-throughs rates. Meta, in its latest quarter, cited more accurate predictions and improved advertiser performance as contributing to the significant acceleration in its revenue. In addition, consumer internet companies are investing in generative AI to support content creators, advertisers, and customers through automation tools for content and ad creation, online product descriptions, and AI shopping assistance. Enterprise software companies are applying generative AI to help customers realize productivity gains. Early customers we've partnered with for both training and inference of generative AI are already seeing notable commercial success. ServiceNow's generative AI products in their latest quarter drove their largest ever net new annual contract value contribution of any new product family release. We are working with many other leading AI and enterprise software platforms as well, including Adobe, Databricks, Getty Images, SAP, and Snowflake. The field of foundation large language models is thriving. Anthropic, Google, Inflection, Microsoft, OpenAI, and xAI are leading with continued amazing breakthrough in generative AI. Exciting companies like Adept, AI21, Character AI, Cohere, Mistral, Perplexity, and Runway are building platforms to serve enterprises and creators. New startups are creating LLMs to serve the specific languages, cultures, and customs of the world's many regions. And others are creating foundation models to address entirely different industries, like recursion, pharmaceuticals, and generative biomedicines for biology. These companies are driving demand for NVIDIA AI infrastructure through hyperscale or GPU specialized cloud providers. Just this morning, we announced that we collaborated with Google to optimize its state-of-the-art new Gemma language models to accelerate their inference performance on NVIDIA GPUs in the cloud, data center, and PC. One of the most notable trends over the past year is the significant adoption of AI by enterprises across the industry verticals, such as automotive, healthcare, and financial services. NVIDIA offers multiple application frameworks to help companies adopt AI in vertical domains such as autonomous driving, drug discovery, low latency machine learning for fraud detection, or robotics, leveraging our full stack accelerated computing platform. We estimate that data center revenue contribution of the automotive vertical through the cloud or on-prem exceeded $1 billion last year. NVIDIA Drive infrastructure solutions include systems and software for the development of autonomous driving, including data ingestion, curation, labeling, and AI training, plus validation through simulation. Almost 80 vehicle manufacturers across global OEMs, new energy vehicles, trucking, robotaxi, and Tier 1 suppliers are using NVIDIA's AI infrastructure to train LLMs and other AI models for automated driving and AI cockpit applications. In effect, nearly every automotive company working on AI is working with NVIDIA. As AV algorithms move to video transformers and more cars are equipped with cameras, we expect NVIDIA's automotive data center processing demand to grow significantly. In healthcare, digital biology and generative AI are helping to reinvent drug discovery, surgery, medical imaging, and wearable devices. We have built deep domain expertise in healthcare over the past decade, creating the NVIDIA Clara healthcare platform and NVIDIA BioNeMo, a generative AI service to develop, customize, and deploy AI foundation models for computer-aided drug discovery. BioNeMo features a growing collection of pre-trained biomolecular AI models that can be applied to the end-to-end drug discovery processes. We announced Recursion is making available for their proprietary AI model through BioNeMo for the drug discovery ecosystem. In financial services, customers are using AI for a growing set of use cases, from trading and risk management to customer service and fraud detection. For example, American Express improved fraud detection accuracy by 6% using NVIDIA AI. Shifting to our data center revenue by geography, growth was strong across all regions except for China, where our data center revenue declined significantly following the U.S. government export control regulations imposed in October. Although we have not received licenses from the U.S. government to ship restricted products to China, we have started shipping alternatives that don't require a license for the China market. China represented a mid-single-digit percentage of our data center revenue in Q4, and we expect it to stay in a similar range in the first quarter. In regions outside of the U.S. and China, sovereign AI has become an additional demand driver. Countries around the world are investing in AI infrastructure to support the building of large language models in their own language, on domestic data, and in support of their local research and enterprise ecosystems. From a product perspective, the vast majority of revenue was driven by our Hopper architecture, along with InfiniBand networking. Together, they have emerged as the de facto standard for accelerated computing and AI infrastructure. We are on track to ramp H200 with initial shipments in the second quarter. Demand is strong as H200 nearly doubles the inference performance of H100. Networking exceeded a $13 billion annualized revenue run rate. Our end-to-end networking solutions define modern AI data centers. Our quantum InfiniBand solutions grew more than 5x year on year. NVIDIA Quantum InfiniBand is the standard for the highest performance AI dedicated infrastructures. We are now entering the Ethernet networking space with the launch of our new Spectrum-X end-to-end offering, designed for an AI-optimized networking for the data center. Spectrum-X introduces new technologies over Ethernet that are purpose-built for AI. Technologies incorporated in our Spectrum switch, Bluefield, DPU, and software stack deliver 1.6x higher networking performance for AI processing compared with traditional Ethernet. Leading OEMs, including Dell, HPE, Lenovo, and Supermicro, with their global sales channels, are partnering with us to expand our AI solution to enterprises worldwide.
Did she say
We
Dell
are on
too?
track to ship Spectrum
Pretty sure
X
she did.
this quarter.
Dell and Supermicro.
With our software and services offerings, which reached an annualized revenue run rate of $1 billion in Q4. We announced that Nvidia DGX Cloud will expand its list of partners to include Amazon's AWS, joining Microsoft Azure, Google Cloud, and Oracle Cloud. DGX Cloud is used for Nvidia's own AI R&D and custom model development, as well as Nvidia developers. It brings the CUDA ecosystem to Nvidia CSP partners. Okay, moving to gaming. Gaming revenue was $2.87 billion, was flat sequentially and up 56% year on year. Better than our outlook on solid consumer demand for Nvidia GeForce RTX GPUs during the holidays. Fiscal year revenue of $10.45 billion was up 15%. At CES, we announced our GeForce RTX 40 Super Series family of GPUs. Starting at $599, they deliver incredible gaming performance and generative AI capabilities. Sales are off to a great start. NVIDIA AI Tensor Cores in the GPUs deliver up to 836 AI TOPS. Perfect for powering AI for gaming, creating, and everyday productivity. The rich software stack we offer with our RTX GPUs further accelerates AI. With our DLSS technology, 7 out of 8 pixels can be AI generated, resulting up to 4x faster ray tracing and better image quality. And with the Tensor RT LLM for Windows, our open source library that accelerates inference performance for the latest large language models, generative AI can run up to 5x faster on RTX AI PCs. At CES, we also announced a wave of new RTX 40 series AI laptops from every major OEM. These bring high-performance gaming and AI capabilities to a wide range of form factors, including 14-inch and thin and light laptops. With up to 686 TOPS of AI performance, these next generation's AI PCs increase generative AI performance by up to 60x, making them the best performing AI PC platforms. At CES, we announced NVIDIA Avatar Cloud Engine microservices, which allow developers to integrate state-of-the-art generative AI models into digital avatars. ACE won several Best of CES 2024 awards. NVIDIA has an end-to-end platform for building and deploying generative AI applications for RTX PCs and workstations. This includes libraries, SDKs, tools, and services developers can incorporate into their generative AI workflows. NVIDIA is fueling the next wave of generative AI applications coming to the PC. With over 100 million RTX PCs in the installed base and over 500 AI-enabled PC applications and games, we are on our way. Moving to Pro Visualization. Revenue of $463 million was up 11% sequentially and up 105% year on year. Fiscal year revenue of $1.55 billion was up 1%. Sequential growth in the quarter was driven by a rich mix of RTX Ada architecture GPUs continuing to ramp. Enterprises are refreshing their workstations to support generative AI-related workloads such as data preparation, LLM fine-tuning, and retrieval augmented generation. These key industrial verticals driving demand include manufacturing, automotive, and robotics. The automotive industry has also been an early adopter of NVIDIA Omniverse as it seeks to digitalize workflows from design to build, simulate, operate, and experience their factories and cars. At CES, we announced that creative partners and developers, including Brickland, WPP, and ZeroLight, are building Omniverse-powered car configurators. Leading automakers like Lotus are adopting the technology to bring new levels of personalization, realism, and interactivity to the car buying experience. Moving to automotive. Revenue was $281 million, up 8% sequentially and down 4% year on year. Fiscal year revenue of $1.09 billion was up 21%, crossing the $1 billion mark for the first time on continued adoption of the NVIDIA Drive platform by automakers. NVIDIA Drive Orin is the AI car computer of choice for software-defined AV fleets. Its successor, NVIDIA Drive Thor, designed for vision transformers, offers more AI performance and integrates a wide range of intelligent capabilities into a single AI compute platform, including autonomous driving and parking, driver and passenger monitoring, and AI cockpit functionality, and will be available next year. There were several.
Ooh, is that a Tesla competitor?
This quarter. Li Auto, Great Wall Motor, Zeekr, the premium EV subsidiary of Geely, and Xiaomi EV all announced new vehicles built on NVIDIA. Moving to the rest of the P&L. GAAP gross margins expanded sequentially to 76% and non-GAAP gross margins to 76.7% on strong data center growth and mix. Our gross margins in Q4 benefited from favorable component costs. Sequentially, GAAP operating expenses were up 6% and non-GAAP operating expenses were up 9%, primarily reflecting higher compute and infrastructure investments and employee growth. In Q4, we returned $2.8 billion to shareholders in the form of share repurchases and cash dividends. During fiscal year 24, we utilized cash of $9.9 billion towards shareholder returns, including $9.5 billion in share repurchases. Let me turn to the outlook for the first quarter. Total revenue is expected to be $24 billion, plus or minus 2%. We expect sequential growth in data center and ProViz, partially offset by seasonal decline in gaming. GAAP and non-GAAP gross margins are expected to be 76.3% and 77%, respectively, plus or minus 50 basis points. Similar to Q4, Q1 gross margins are benefiting from favorable component costs. Beyond Q1, for the remainder of the year, we expect gross margins to return to the mid-70s% range.
Wait.
GAAP and non-GAAP.
Mid-70s is good. I heard return.
Approximately $3.5 billion and $2.5 billion.
That was okay. That was okay.
Fiscal year 2025 GAAP and non-GAAP operating expenses are expected to grow in the mid-30% range as we continue to invest in the large opportunities ahead of us. GAAP and non-GAAP other income and expenses.
There's some margin compression here.
Of approximately $250 million, excluding gains and losses from non-affiliated investments. GAAP and non-GAAP tax rates are expected to be 17%, plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website. In closing, let me highlight some upcoming events for the financial community. We will attend the Morgan Stanley Technology and Media and Telecom Conference in San Francisco on March 4th, and the TD Cowen's 44th Annual Healthcare Conference in Boston on March 5th. And of course, please join us for our annual GTC conference starting Monday, March 18th in San Jose, California. To be held in person for the first time in 5 years, GTC will kick off with Jensen's keynote, and we will host a Q&A session for financial analysts the next day, March 19th. We are now open the call for questions. Operator, would you please poll for questions?
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone.
Super Microcomputer just announced, thanks Max, a $1.5 billion convertible notes offering. Not a surprise for them to do that at this height.
First question comes from the line of Toshiya Hari from Goldman Sachs.
Where's Jensen?
Hi, thank you so much for taking the question and congratulations on the really strong results. My question is for Jensen on the data center business.
There we go.
Clearly, you're doing extremely well in the business. I'm curious how your expectations for calendar 24 and 25 have evolved over the past 90 days. And as you answer the question, I was hoping you can touch on, some of the newer buckets within data center, things like software, sovereign AI. I think you've been pretty vocal about how to think about that medium to long term. And recently there was an article about, NVIDIA potentially participating in the ASIC market. Is there any credence to that? And if so, how should we think about you guys playing in that market over the next several years? Thank you.
Thanks, Toshiya. Let's see. There were 3 questions. One more time. First question was
expectations.
Well,
I guess your expectations for data center, how they've evolved. Thank you.
Okay. Yeah. Well, we guide one quarter at a time, but fundamentally the conditions are excellent for continued growth, calendar 24 to calendar 25 and beyond. And let me tell you why. We're at the beginning of 2 industry-wide transitions, and both of them are industry-wide. The first one is a transition from general to accelerated computing. General purpose computing, as you know, is starting to run out of steam, and you could tell by the CSPs extending, and many data centers, including our own for general purpose computing, extending the depreciation from 4 to 6 years. There's just no reason to update with more CPUs when you can't fundamentally and dramatically enhance its throughput like you used to. And so you have to accelerate everything. This is what NVIDIA's been pioneering for some time. And with accelerated computing, you can dramatically improve your energy efficiency. You can dramatically improve your cost in data processing by 20 to 1. Huge numbers. And of course, the speed. That speed is so incredible that we enabled a second industry-wide transition called generative AI. Generative AI, I'm sure we're going to talk plenty about it during the call. But remember, generative AI is a new application. It is enabling a new way of doing software, new types of software being created. It is a new way of computing. You can't do generative AI on traditional general purpose computing. You have to accelerate it. And the third is it is enabling a whole new industry. And this is something worthwhile to take a step back and look at, and it connects to your last question about sovereign AI. A whole new industry in the sense that for the very first time, a data center is not just about computing data and storing data and serving the employees of a company. We now have a new type of data center that is about AI generation, an AI generation factory. And you've heard me describe it as AI factories. But basically, it takes raw material, which is data, it transforms it with these AI supercomputers that NVIDIA builds, and it turns them into incredibly valuable tokens. These tokens are what people experience on the amazing ChatGPT or Midjourney or search these days are augmented by that. All of your recommender systems are now augmented by that. The hyper-personalization that goes along with it. All of these incredible startups in digital biology, generating proteins and generating chemicals, and the list goes on. And so all of these tokens are generated in a very specialized type of data center. And this data center we call AI supercomputers and AI generation factories. But we're seeing diversity. One of the other reasons, So at the foundation is that. The way it manifests into new markets is in all of the diversity that you're seeing us in. One, the amount of inference that we do is just off the charts now. Almost every single time you interact with ChatGPT, you know that we're inferencing. Every time you use Midjourney, we're inferencing. Every time you see amazing these Sora videos that are being generated, or Runway, the videos that they're editing, Firefly, NVIDIA is doing
Runway
inferencing. The inference part of our business has grown tremendously. We estimate about 40%. The amount of training is continuing because these models are getting larger and larger. The amount of inference is increasing. But we're also diversifying into new industries. The large CSPs are still continuing to build out. You could see
Cloud
from their
providers.
CapEx and their discussions. But there's a whole new category called GPU specialized CSPs. They specialize in NVIDIA AI infrastructure, GPU specialized CSPs. You're seeing enterprise software platforms deploying AI. ServiceNow is just a really, really great example. You see Adobe, you see others, SAP and others. You see consumer internet services that are now augmenting all of their services of the past with generative AI, so they can have even more hyper-personalized content to be created. You see us talking about industrial generative AI. Now our industries represent multi-billion-dollar businesses. Auto, health, financial services, in total, our vertical industries are multi-billion-dollar businesses now. And of course, sovereign AI. The reason for sovereign AI has to do with the fact that the language, the knowledge, the history, the culture, and they own their own data. They would like to use their data, train it to create their own digital intelligence, and provision it to harness that raw material themselves. It belongs to them. Each one of the regions around the world, the data belongs to them. The data is most useful to their society. And so they want to protect the data. They want to transform it themselves, value-added transformation into AI, and provision those services themselves. So we're seeing sovereign AI in Japan, in Canada, in France, so many other regions. And so my expectation is that what is being experienced here in the United States, in the West, will surely be replicated around the world. And these AI generation factories are going to be in every industry, every company, every region. And so I think this last year we've seen generative AI really becoming a whole new application space, a whole new way of doing computing, a whole new industries being formed, and that's driving our growth.
Your next question comes from a line of Joe Moore from Morgan Stanley. Your line is open.
Great, thank you. I wanted to follow up on the 40% of revenues coming from inference. That's a bigger number than I expected. Can you give us some sense of, where that number was, maybe the year before, how much you're seeing growth around LLMs from inference, and how are you measuring that? Is that, I assume it's in some cases the same GPUs you use for training and inference. How solid is that measurement? Thank you.
Huh. What happened? Where's my... Hold on a sec. That was my fault. Fixing that. Stand by 1 sec. Stupid Bluetooth thing. My fault. And audio. Stupid thing. What the frack? I don't know what happened. I screwed it up. And I didn't change anything. Audio. That's very inconvenient. Okay. Sorry. There we go.
All based on CPU
Coming back.
approaches. But the recent migration to deep learning and now generative AI has really put these recommender systems now directly into the path of GPU acceleration. It needs GPU acceleration for the embeddings. It needs GPU acceleration for the nearest neighbor search. It needs GPU acceleration for the re-ranking, and it needs GPU acceleration to generate the augmented information for you. So GPUs are in every single step of a recommender system now. And as you know, recommender system is the single largest software engine on the planet. Almost every major company in the world has to run these large recommender systems. Whenever you use ChatGPT as being inference, whenever you hear about Midjourney and just the number of things that they're generating for consumers, when you see Getty, the work that we do with Getty and Firefly from Adobe, these are all generative models. The list goes on, and none of these, as I mentioned, existed a year ago. 100% new.
Full summary so far at ehack.com. Keep that in mind.
From a line of Stacy Rasgon from Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my question. Colette, I wanted to touch on your comment that you expected the next generation of products, I assume that meant Blackwell, to be supply constrained. Can you dig into that a little bit? What is the driver of that? Why does that get constrained as Hopper is easing up? And how long do you expect that to be constrained? Like, do you expect the next generation to be constrained like all the way through calendar 25? Like, when do those start to ease?
Yeah, the first thing is overall our supply is improving. Overall, our supply chain is just doing an incredible job for us. Everything from, of course, the wafers, the packaging, the memories, all of the power regulators, to transceivers and networking and cables and you name it. The list of components that we ship, as you know, people think that NVIDIA GPUs is like a chip, but the NVIDIA Hopper GPU has 35,000 parts. It weighs 70 pounds. These things are really complicated things. People call it an AI supercomputer for good reason. If you ever look in the back of the data center, the systems, the cabling system is mind-boggling. It is the most dense, complex cabling system for networking the world's ever seen. Our InfiniBand business grew 5x year over year. The supply chain is really doing fantastic supporting us. And so overall, the supply is improving. We expect the demand will continue to be stronger than our supply provides, and through the year. And we'll do our best. The cycle times are improving, and we're going to continue to do our best. However, whenever we have new products, as you know, it ramps from 0 to a very large number.
Here we go.
You can't do that overnight.
Yep.
You know, everything is ramped up. It doesn't step up. And so whenever we have a new generation of products, and right now we are ramping H200s, there's no way we can reasonably keep up on demand in a short term as we ramp. We're ramping Spectrum X. We're doing incredibly well with Spectrum X. It's our brand new product into the world of Ethernet. InfiniBand is the standard for AI dedicated systems. Ethernet with Spectrum X, Ethernet is just not a very good scale-out system. But with Spectrum X, we've augmented, layered on top of Ethernet, fundamental new capabilities like adaptive routing, congestion control, noise isolation or traffic isolation, so that we could optimize Ethernet for AI. And so InfiniBand will be our AI dedicated infrastructure. Spectrum X will be our AI optimized networking, and that is ramping. And so we'll you know, with all of new products, demand is greater than supply, and that's just kind of the nature of new products. And we work as fast as we can to catch up with the demand. But overall, overall, net, overall, our supply is increasing very nicely.
Your next question comes from the line of Matt Ramsey from TD Cowen. Your line is open.
Good afternoon, Jensen, Colette. Congrats on the results. I wanted to ask, I guess, a two-part question, and it comes at what Stacy was just getting at on your demand being significantly more than your supply, even though supply is improving. And I guess the two sides of the question are, I guess, first for Colette, like, how are you guys thinking about allocation of product in terms of customer readiness to deploy and sort of monitoring if there's any kind of buildup of product that might not yet be turned on? And then,
good question.
I guess, Jensen, for you, I'd be really interested to hear you speak a bit about a thought that you and your company are putting into the allocation of your product across customers, many of which compete with each other, across industries to smaller startup companies, to things in the healthcare arena, to governments. It's a very, very unique technology that you're enabling, and I'd be really interested to hear you speak a bit about how you think about, quote unquote, fairly allocating sort of for the good of your company, but also for the good of the industry. Thanks.
Let me first start with your question, thanks, about how we are working with our customers as they look into how they are building out their GPU instances and our allocation process. The folks that we work with, our customers that we work with, have been partners with us for many years as we have been assisting them both in what they set up in the cloud as well as what they are setting up internally. Many of these providers have multiple products going at one time to serve so many different needs across their end customers, but also what they need internally. So they are working in advance, of course, thinking about those new clusters that they will need. And our discussions with them continue, not only on our Hopper architecture, but helping them understand the next wave and getting their interest and getting their outlook for the demand that they want. So it's always a moving process in terms of what they will purchase, what is still being built, and what is in use for end customers. But the relationships that we've built and their understanding of the sophistication of the build has really helped us with that allocation and both helped us with our communications with them.
First, our CSPs have a very clear view of our product roadmap and transitions. And that transparency with our CSPs gives them the confidence of which products to place and where and when. And so they know the timing to the best of our ability, and they know quantities, and of course allocation. We allocate fairly. Do the best we can to allocate fairly, and to avoid allocating unnecessarily. As you mentioned earlier, why allocate something when a data center is not ready? Nothing is more difficult than to have anything sit around. And so allocate fairly and to avoid allocating unnecessarily. And the question that you asked about the end markets, you know that we have an excellent ecosystem with OEMs, ODMs, CSPs, and very importantly, end markets. What NVIDIA is really unique about is that we bring our customers, we bring our partners, CSPs and OEMs, we bring them customers. The biology companies, the healthcare companies, financial services companies, AI developers, large language model developers, autonomous vehicle companies, robotics companies. There's just a giant suite of robotics companies that are emerging. They're warehouse robotics to surgical robotics to humanoid robotics, all kinds of really interesting robotics companies, agriculture robotics companies. All of these startups, large companies, healthcare, financial services, and auto and such, are working on NVIDIA's platform. We support them directly. And oftentimes, we can have a twofer by allocating to a CSP and bringing the customer to the CSP at the same time. And so this ecosystem, you're absolutely right that it's vibrant, but at the core of it, we want to allocate fairly, with avoiding waste and looking for opportunities to connect partners and end users. We're looking for those opportunities all the time.
Your next question comes from a line of Timothy Arcuri from UBS. Your line is open.
Thanks a lot. I wanted to ask about how you're converting backlog into revenue. Obviously, lead times for your products have come down quite a bit. Colette, you didn't talk about the inventory purchase commitments, but if I sort of add up your inventory plus the purchase commits and your prepaid supply, sort of the aggregate of your supply, it was actually down a touch. How should we read that? Is that just you saying that you don't need to make as much of a financial commitment to your suppliers because the lead times are lower, or is that maybe you're reaching some sort of steady state where you're closer to filling your order book and your backlog? Thanks.
Yeah, so let me highlight on those three different areas of how we look at our suppliers. You're correct, our inventory on hand, given our allocation that we're on, we're trying to, as things come into inventory, immediately work to ship them to our customers. I think our customer appreciates our ability to meet the schedules that we've looked for. The second piece of it is our purchase commitments. Our purchase commitments have many different components into it, components that we need for manufacturing, but also often we are procuring capacity that we may need. The lengths of that need for capacity or the length for the components are all different. Some of them may be for the next 2 quarters, but some of them may be for multiple years. I can say the same regarding our prepaids. Our prepaids are pre-designed to make sure that we have the reserved capacity that we need at several of our manufacturing suppliers as we work forward. So wouldn't read into anything regarding approximately about the same numbers as we are increasing our supply. All of them just have different lengths as we have sometimes had to buy things in long lead times or things that needed capacity to be built for us.
Your next question comes from a line of Ben Reitz from Melius Research. Your line is open.
Yeah, thanks. Congratulations on the results. Colette, I wanted to talk about your comment regarding gross margins and that they should go back to the mid-70s. If you don't mind unpacking that. And also, is that due to the HBM content in the new products? And what do you think are the drivers of that comment? Thanks so much.
Yeah, thanks for the question. We highlighted in our opening remarks really about our Q4 results and our outlook for Q1. Both of those quarters are unique. Those 2 quarters are unique in their gross margin as they include some benefits from favorable component costs in the supply chain, kind of across both our compute and networking, and also in several different stages of our manufacturing process. So looking forward, we have visibility into a mid-70s gross margin for the rest of the fiscal year, taking us back to where we were before this Q4 and Q1 peak that we've had here. So we're really looking at just a balance of our mix. Mix is always going to be our largest driver of what we will be shipping for the rest of the year, and those are really just the drivers.
Your next question comes from a line of CJ Muse from Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. Bigger picture question for you, Jensen. When you think about the million X improvement in GPU compute over the last decade and expectations for similar improvements in the next, how do your customers think about the long-term usability of their NVIDIA investments that they're making today? Do today's training clusters become tomorrow's inference clusters? How do you see this playing out?
Yes.
Thank
That's the upgrade cycle question.
Hey, CJ, thanks for the question. Yeah, that's the really cool part. If you look at the reason why we're able to improve performance so much, it's because we have two characteristics about our platform. One is that it's accelerated, and two, it's programmable. It's not brittle. NVIDIA is the only architecture that has gone from the very, very beginning, literally the very beginning when CNNs and Alex Kershevsky and Ilya Sutskever and Jeff Hinton first revealed AlexNet, all the way through RNNs to LSTMs to every RLs to deep learning RLs to transformers to every single version and every species that have come along, vision transformers, multimodality transformers, every single, and then now time sequence stuff, every single variation, every single species of AI that has come along, we've been able to support it, optimize our stack for it, and deploy it into our installed base. This is really the great, amazing part. On the one hand, we can invent new architectures and new technologies like our tensor cores, like our transformer engine for tensor cores, improve new numerical formats and structures of processing like we've done with the different generations of tensor cores, meanwhile supporting the installed base at the same time. And so as a result, we take all of our new software algorithm inventions, all of the inventions, new inventions of models of the industry, and it runs on our install base on the one hand. On the other hand, whenever we see something revolutionary, we can, like transformers, we can create something brand new, like the Hopper transformer engine, and implement it into future. And so we simultaneously have this ability to bring software to the install base and keep making it better and better and better, so our customers' install base is enriched over time with our new software. On the other hand, for new technologies, create revolutionary capabilities. Don't be surprised if in our future generation, all of a sudden, amazing breakthroughs in large language models were made possible. And that those breakthroughs, some of which will be in software because they run CUDA, will be made available to the install base. And so we carry everybody with us on the one hand, we make giant breakthroughs on the other hand.
Your next question comes from a line of Aaron Rakers from Wells Fargo. Your line is open.
Yeah, thanks for taking the question. I wanted to ask about the China business. I know that in the prepared comments, you said that you started shipping some alternative solutions into China. You also pointed out that you expect that contribution to continue to be about a mid-single digit percent of your total data center business. So I guess the question is what is the extent of products that you're shipping today into the China market, and why should we not expect that maybe other alternative solutions come to the market and expand your breadth to participate in that opportunity again? Thank you.
At the core, remember, the U.S. government wants to limit the latest capabilities of NVIDIA's accelerated computing and AI to the Chinese market. And the U.S. government would like to see us be as successful in China as possible. Within those two constraints, within those two pillars, if you will, are the restrictions. And so we had to pause when the new restrictions came out. We immediately paused so that we understood what the restrictions are, reconfigured our products in a way that is not software hackable in any way. And that took some time. And so we reset our product offering to China, and now we're sampling to customers in China. And we're going to do our best to compete in that marketplace and succeed in that marketplace within the specifications of the restriction. And so that's it. This last quarter, our business significantly declined as we paused in the marketplace. We stopped shipping in the marketplace. We expect this quarter to be about the same. But after that, hopefully we can go compete for our business and do our best, and we'll see how it turns out.
Your next question comes from a line of Harsh Kumar from Piper Sandler. Your line is open.
Yeah, hey, Jensen, Colette, and NVIDIA team. First of all, congratulations on a stunning quarter and guide. I wanted to talk about a little bit about your software business, and it's pleasing to hear that it's over $1 billion. But I was hoping, Jensen or Colette, if you could just help us understand what the different parts and pieces are for the software business. In other words, just help us unpack it a little bit so we can get a better understanding.
Remember, quickly, full summary so far is already up at ehack.com.
I can explain the fundamental reason why NVIDIA will be very successful in software. So first, as you know, accelerated computing really grew in the cloud. In the cloud service providers have really large engineering teams, and we work with them in a way that allows them to operate and manage their own business. And whenever there are any issues, we have large teams assigned to them, and their engineering teams are working directly with our engineering teams, and we enhance, we fix, we maintain, we patch the complicated stack of software that's involved in accelerated computing. As you know, accelerated computing is very different than general purpose computing. You're not starting from a program like C++, you compile it and things run on all your CPUs. The stacks of software necessary for every domain, from data processing, SQL versus SQL structured data versus all the images and text and PDF, which is unstructured, to classical machine learning, to computer vision, to speech, to large language models, all of recommender systems. All of these things require different software stacks. That's the reason why NVIDIA has hundreds of libraries. If you don't have software, you can't open new markets. If you don't have software, you can't open and enable new applications. Software is fundamentally necessary for accelerated computing. This is the fundamental difference between accelerated computing and general purpose computing that most people took a long time to understand. And now people understand that the software is really key. In the way that we work with CSPs, that's really easy. We have large teams that are working with their large teams. However, now that generative AI is enabling every enterprise and every enterprise software company to embrace accelerated computing. And when it is now essential to embrace accelerated computing because it is no longer possible, no longer likely anyhow, to sustain improved throughput through just general purpose computing. All of these enterprise software companies and enterprise companies don't have large engineering teams to be able to maintain and optimize their software stack to run across all of the world's clouds and private clouds and on-prem. So we are going to do the management, the optimization, the patching, the tuning, the install base optimization for all of their software stacks. And we containerize them into our stack. We call it NVIDIA AI Enterprise. And the way we go to market with it is think of that NVIDIA AI Enterprise now as a runtime like an operating system. It's an operating system for artificial intelligence. And we charge $4,500 per GPU per year. And my guess is that every enterprise in the world, every software enterprise company that are deploying software in all the clouds and private clouds and on-prem will run on NVIDIA AI Enterprise, especially, obviously for our GPUs. And so this is going to likely be a very significant business over time. We're off to a great start, and Colette mentioned that it's already at $1 billion run rate, and we're really just getting started.
Thank you. I will now turn the call back over to Jensen Huang, CEO, for closing remarks.
The computer industry is making two simultaneous platform shifts at the same time. The $1 trillion install base of data centers is transitioning from general purpose to accelerated computing. every data center will be accelerated so the world can keep up with the computing demand with increasing throughput while managing cost and energy. The incredible speed up of NVIDIA enabled a whole new computing paradigm, generative AI, where software can learn, understand, and generate any information, from human language to the structure of biology and the 3D world. We are now at the beginning of a new industry where AI-dedicated data centers process massive raw data to refine it into digital intelligence. Like AC power generation plants of the last industrial revolution, NVIDIA AI supercomputers are essentially AI generation factories of this industrial revolution. Every company and every industry is fundamentally built on their proprietary business intelligence, and in the future, their proprietary generative AI. Generative AI has kicked off a whole new investment cycle to build the next $1 trillion of infrastructure of AI generation factories. We believe these two trends will drive a doubling of the world's data center infrastructure installed base in the next 5 years, and will represent an annual market opportunity in the hundreds of billions. This new AI infrastructure will open up a whole new world of applications not possible today. We started the AI journey with the hyperscale cloud providers and consumer internet companies. And now every industry is on board, from automotive to healthcare to financial services to industrial to telecom, media and entertainment. NVIDIA's full stack computing platform with industry-specific applications frameworks and a huge developer and partner ecosystem gives us the speed, scale, and reach to help companies in every industry become an AI company. We have so much to share with you at next month's GTC in San Jose, so be sure to join us. We look forward to updating you on our progress next quarter.
This concludes today's conference.
All right, let's go ahead and get through a summary here. So who's ready for that? There's a lot of summing to do. As usual, the full summary is over at ehack.com. But for now, let's go ahead and get into a bit of a summary. All right. Oh boy. Okie dokie. Let us do the summary. Who's ready? All right. Ooh. Well, it looks like the peak is still not in for Nvidia. In fact, my expectation was that Nvidia was going to beat today, but I didn't think their guide would be as delicious and scrumptious as it actually was. Wall Street was looking for 20.4 billion, Nvidia guided 20 billion, they usually beat. I was looking for up to about 20.5 billion. We actually got 22.1 billion of revenue with a guide of 24 billion. Now that's exciting because it shows us about maybe an 8.6% growth quarter over quarter. And if we adjust that by how much they usually beat by, Nvidia is actually telling us that they haven't hit peak yet. Now, how we do that is really important, and we're going to go through notes from the earnings call and from the earnings report and everything. But most importantly, I want you to look right here. This right here, this little scribbling of notes in this segment right here shows you that revenue has gone from 34% growth from Q2 to Q3 to 22% growth from Q3 to Q4, and now we're looking forward probably to about 19% growth in the next quarter. That is still really good. I was worried, and that's adjusted by how much they're probably going to beat by in the next quarter and what they hinted in their earnings call. I'll explain the earnings call hint in just a moment, but that's good. It suggests we're still seeing that quarter over quarter growth. The AI excitement isn't gone yet. And margin is actually increasing to 76%. 4.7%. On a gross margin basis, on a gross profit basis, that's incredible. Now, guess what they hinted at when the peak might hit? Q4 and Q1 are expected to retain these sort of margins that we've seen. But Q2 and the rest of 2024 is expected to see margin return to the mid-70s. That would be your 74 to 75-ish, maybe 76 range, down from about that 77% where we are now. That's a sign that they're expecting margins to finally start coming down when they guide for Q2, which means if we're looking for a peak, we might still be a quarter too early. Now keep in mind, we know that AI has been transformative, but we know at some point the growth rate will slow. It looks like it's not this Q4, maybe it'll be Q1. Why? Because supply is finally catching up, and we expect to be balanced with supply and demand in 2025. So that does mean you're still supply constrained for 2024, and you probably have tailwinds and probably not really any kind of earnings misses for much of 2024, as you are still supply constrained. Maybe you start getting that weaker growth forecasting, though, quarter over quarter, starting in Q2, and maybe you start looking at misses in 2025. But that does mean you've probably got some real insulation investing in Nvidia stocks still longer than expected. This is better than expected. Now, some of the things that we heard about on their earnings call, they talked about how 40% of their data center revenue was driven by AI. This is phenomenal. Now, we have seen data center revenue double, so it kind of makes sense that half of the data center revenue is the old and approximately half is the new. So maybe not that big of a deal. Of course, we got a lot of excitement from Jensen about how this is the next industrial revolution for biotech, for cloud service providers, for automotive, for vehicle. In fact, there was even a hint that NVIDIA's Thor platform, which might be released next year, would actually help other vehicle platforms introduce self-driving technologies, somewhat maybe the likes of which Tesla has, for other manufacturers. That expected to be released next year, and probably a competitor to Tesla to some extent. Of course, the extent that that NVIDIA Thor product will be competitive to Tesla, we'll have to see in TBD. But the point is, NVIDIA is very, very excited about the future, not just from bio and basically making drug discovery AI models, giving those to pharmaceuticals and going, here's an AI model you could use for your pharma to come up with new drugs. Here's an AI model you can use in your robotics. Here are AI models you can use in your self-driving endeavors. NVIDIA is basically trying to build out the models for companies so they basically have a ready-to-use artificial intelligence product. And what they're doing is they're saying, look, you don't even need to buy the chip yourself. You could rent it for $4,500 a year if you want, but why don't you just partner with Google or Microsoft or Meta and use their, or Amazon for that matter, and use their built-out data centers to utilize our chips, our technology, our code, our CUDA network through those cloud service providers. This is where Jensen was really suggesting the customers of NVIDIA are not just getting the product, but they're also getting customers. Because NVIDIA is kind of like, okay, well, we sold all these chips to Google. Oh, okay, you're a pharmaceutical, you want to use AI? Here, let's hook you up with Google. So, kind of interesting. And they're prioritizing their supply based on how quickly these data centers can actually deploy the chips, which is fantastic because what you don't want are, is basically NVIDIA supplying a bunch of these expensive chips and then these 35,000 piece H100s that weigh 70 pounds sitting in a corner somewhere collecting dust. You don't want that. I did think there was one underwhelming reference they gave. They said American Express improved fraud detection by 6% using AI. And I'm like, that's not that huge. I mean, maybe, you know, in the grand scheme of things, when it comes to American Express's actual losses or prevented losses, that's great. I mean, it's money, right? It makes sense for the investment. But you know, I'm looking for a little bit more than 6%. I've always kind of thought AI sort of helped me be maybe 10 to 15% more productive. I have a whole course on how I do that. Well, it's in the productivity course. It's just a small segment of that. But I personally think that 6% reference, I mean, unless I misheard it and it was 60%, I don't think I did, but 6% seemed like a little bit of a low reference. There's also this talk about Spectrum X, and this is basically NVIDIA's way of saying, look, we think if you're going to build out a data center, you should use InfiniBand. That's our technology. That's the best wiring system we can give you. But if you're really stuck on using Ethernet, which is where you have competition coming in, AMD is partnering with Cisco and Broadcom to really build out what they call the ultimate Ethernet system. Okay, ultimate Ethernet. Tongue twisted on all these words here. Ultimate Ethernet is supposed to be a competitor to InfiniBand. Okay, that's, again, the consortium between Cisco, AMD, and Broadcom. They're doing Ultimate Ethernet. NVIDIA's like, we do InfiniBand, but now NVIDIA's also like, but if you really want to stick to using Ethernet, well, then you could use Spectrum X. That's our Ethernet version for you, and the best product we can give you via NVIDIA. I think that's very interesting. They're really trying to make sure they can sell you a chip no matter what system you're on or wiring infrastructure you're on. Remember, once a data center's built, which is very expensive to build, you want to keep using those products. Speaking of building data centers, Supermicro announced a $1.9 billion convertible offering that did lead their stock to drop a little bit there in the post-market. It is still up about 7%, following Nvidia's about 7% rise. We'll see how robust this is. It's been very, very stuck and at that 731 level. It keeps getting rejected by 731. Did briefly try to break out, couldn't hold it. We'll see what happens tomorrow. Maybe tomorrow we'll actually get a full breakout here. Who knows? But I have to say, I don't think there was anything massively exciting in this earnings report other than the fact that the growth rate is continuing and they expect to be supply constrained throughout the rest of the year. Supply is improving. Now, this is where things get really problematic long term for some of these AI stock valuations. And I want to be crystal clear here. I have a lot of allocation to Nvidia, TSM, these AI companies. I did trim a little bit before earnings, so I have to say, okay, maybe I could have trimmed after, but oh well, right? A little fluctuation here or there. There's nothing you can do about that. I just want to be transparent about my positioning. My positioning is that over time, as this year progresses and as we get to 2025, it's probably going to make sense to continue to trim a little bit more and start thinking about where's that next segment. Obviously, I've been of this mindset that the next segment is where interest rates give you tailwinds. And so I want to trim from chips and move into where interest rates give me tailwinds, which are going to be ASICs for solar, Enphase, Tesla, those interest rate sensitives. That is sort of a play that I'm looking at because I think that's the next move. Mostly because when that growth cycle does slow, we're not going to see those EPS beats anymore, and those PEG ratios are going to start looking a little expensive, especially for something like Supermicro. They're setting very, very strong comps for the end of 2023 and the beginning of 2024. Those are going to be very tough comps to beat. And remember, the big thing to keep in mind for NVIDIA buildouts or server buildouts is you might have gone from no build-out to build-out. But the question is, what happens once you're built out? Well, are you upgrading to the H200 or the B100? Maybe, maybe not. We did get asked about cycle refresh, but Jensen punted on that. And that's why I'm specifically mentioning this. Kind of punted on this. I was looking at, we did also hear a little bit about a new product reset for China, so in addition to this sort of punt on, hey, are people going to actually keep upgrading? Yes, we know they are sold out basically for their H200s. They say that demand exceeds supply for those. Of course, if you're still building a new infrastructure set, of course you're going to get the latest stuff. The question is, for somebody who already built out to H100, are they going to upgrade to the next cycle? Probably not, because the margins are so high. That's why NVIDIA themselves warn that margins are probably going to peak Q1. They said that, not me. They said margins will probably peak at Q1. And these Q1, Q4 margins that we've had will probably be their top. Now, regarding China, I was going to say they are creating a new product offering for China, and they're testing that out. They don't seem very confident in China. They're kind of guiding the same single digits increase for product revenue from China. Obviously, most revenues here are coming directly from AI in America through the cloud service providers, and of course abroad for any cloud service providers building out infrastructure in other countries. Your Google, your Amazon, your Meta, they don't necessarily have to build the factories, the infrastructure here. They can build that in other areas throughout the world as well. So those are probably my biggest takeaways, and I really want to hone in where I think they matter the most. Peak Q1 margin. I think that matters a lot. And that growth rate, they impressed me. I will give you that. I know this is chicken scratch right here, but I was expecting 34 to go to 22 to go to 10. And my adjusted forecast, based on how much I think they're going to beat in the next quarter, about 15 to 18%. So I take their 8.6% and then I adjust it and then I divide. This quarter-over-quarter sequential growth, it's still going to be strong between Q4 to Q1. But the guide from Q1 to Q2 is probably going to be really interesting. Maybe that's when we get to the 10%. So we're still in a really good place for NVIDIA. I don't know if this is enough to get us to break out over 730. It is entirely possible that this stock could trade sideways. I personally, I've said it. I said it, last year, about 10 months ago. I've said it 5 days ago. I think this is a $600 to $700 stock. I personally did not see anything in these earnings that say this is a $1,000 stock. I don't want to poo-poo anybody's holdings on NVIDIA. I hold a lot of NVIDIA too. Okay, like I'm a big NVIDIA shareholder. I'm just, after this earnings call, I'm thinking to myself, okay, this is impressive. This is good. This is great. We love this. This is all the same stuff we've been hearing, and they're doing great. Their cash flow generation is phenomenal. They've got twice the cash on hand that they had last year. They 5x their InfiniBand deployments. This company is not going anywhere. I can't bet against NVIDIA. But, where am I going to get my next double, right? Am I going to get my next double on NVIDIA or something else? I think it's more likely to be something else. Yeah, is there maybe do I think we can get from 731 to 930 or the 969? I don't think with these earnings we're going to get that. It's my opinion. I could be wrong, not personalized financial advice. But 969 on the fib retracement here divided by 731, a 32% move? I don't think so this year. I could be wrong. And I wouldn't be surprised if we get some bobbing around here. But I personally think it's actually more likely you end up back, potentially in no man's land here than you end up getting up to a 969. And that's why I think sideways teetering is probably most likely here. No guarantees. Now, where I do think there will be some really interesting and then of course I'm afraid of SMCI. But where I do think there is an interesting opportunity, and this is a little special bonus for the people who made it this far in the video, okay? There's this company that was mentioned, and this is just a secret between you and me, okay? They mentioned a company that I had not even freaking paid attention to at all. At all. This is a company that is trading for 12 times earnings. It is a company that is forecasting a growth rate of about, let's see here. I'll tell you. For the next year, 6.4 plus 9, 5, 6, 8, 9, 29.9 divided by 4. Company forecasting a 7.5 growth rate over the next year, each year. 7.5. That's a PEG ratio of 1.6. So I got a company here. And NVIDIA mentioned them as a partner. It is a company that everybody's heard of before. I'm going to one of their last filings here because I want to pull this up. I'm doing it live, baby. And I don't invest in them, but I'm telling you, it's something that I wasn't even expecting to be interested in. But if I go to segments on this next company, I'm expecting to see something interesting. Reportable segments. Here we go. Infrastructure Solutions Group. Okay, so they've got an Infrastructure Solutions Group they're actually negative year over year in infrastructure solutions. So I don't know if the world realizes that they do this infrastructure yet. So I can't make a bet at this point without further research that this is where to go. And so I will say their servers and networking, to be clear, their servers and networking segment is negative. Year over year, November 3rd, 4656, that's 4.6 billion, 4656 divided by 5200. They're negative about 10.5% on servers, but Nvidia shouted out Dell. They shouted out Dell as a networking partner, and I just think to myself, 1/6 peg, are we blind to potentially what Dell is partnering with Nvidia on here? I don't know. I don't know enough about it. Nvidia is not mentioned once in their last 10Q, not a single time. I can go jump to their annual report just to see if they've ever been mentioned over there. The last annual report, though, was March 30th for Dell. And Nvidia is not mentioned once. You can do a quick Nvidia Dell Google here, and there's talk about Project Helix and some generative AI partnerships from back in May, but not a lot of recent information there. But I think there's something there to pay attention to, and maybe there's a value play there. I would certainly, let me just put it this way, be more enthused at this juncture in, I hate to say it, but Dell than Supermicro Computer, because they both supply server infrastructure. That's an initial reaction. It's just a thought. It's something I heard that I don't think anybody else is really paying attention to. So it's just something that I think is worth highlighting. This shout out. They mentioned them in the same vein as their partners when they were mentioning Supermicro Computers. So something to pay attention to. So again, do I think there are going to be better opportunities going forward in terms of growth out there? Absolutely. Am I going to, do I really think it's necessary to dump all my Nvidia because it's going to come crashing and burning attention? No. Peak probably Q1 on margin. Growth rates will continue to decline on the month-over-month basis. The supply will meet demand more clearly in 2025. Now, that's where we're going to probably see massive chip deflation, and you're going to have to be a little careful because in 2025, I want you to think about what's going to happen in 2025. That's where I get a little more nervous, okay? In 2020, and the stock market can sometimes try to price this stuff in, but what do you get in 2025? You're going to get this triangle of slower growth, so slower growth, right? And then high comps, right? Slower growth, high comps, those are about the same. Then you're going to get, you're going to be past peak margin, so I guess I should call that supply balance, so we'll call this an increase of supply. And then you're going to get competition. Now, I know when people hear competition with NVIDIA, they're like, there is no competition, Kevin. What do you think in like companies like AMD, Sam Altman trying to create a chip designing company, every chip designing company out there or startup is trying to do? They're trying to build the next H100. I know it might seem far-fetched, but competition will come. So in 2025, you're going to have this trifecta of a problem for NVIDIA, and so I think that's going to put a damper on how much this sucker can continue to rally, because the stock market will need to start considering the trifecta of more supply, peak margin, competition, slower growth, and high comps going into 2025. My take on NVIDIA, great job. They did a fantastic job. I love what they did. I just don't think it's breakout worthy. If you like this, you could see a full summary over at ehack.com. Full house hack update on the House Hack Homes YouTube channel for my real estate startup. It's not a chip startup, I know. But anyway, thank you so much for watching. I really appreciate y'all, and we'll see you in the next one. Goodbye and good luck.